Hello and welcome to today's video. In this video we'll be taking a look back at how my stocks and shares ISA with Hargreaves Lansdown performed over the month of September. I'll also reveal what the full allocation of £50,000 in premium bonds earned me this month, so be sure to stick around for that. I normally start the monthly update videos with big financial news that's impacted my portfolio. Off the top of my head though, it's been pretty quiet this last month on the financial front. Oh, hang on. I don't actually know where to begin. I was going to make a video about how the tanked pound was affecting my various funds, both negatively and positively, but as I was planning that one, the government pulled a massive U-turn causing the pound to recover slightly. It's still something I may make a video on, as some of the lessons I've learned in the last few weeks I think have relevant value moving forward, but I'll touch on some of the month's events briefly now, but won't go too deep on this, as it will end up being a 3-hour video. The last month has been an absolute mess though, to put it politely. It's really scary to think we were moments away from another financial crash. This was only avoided due to the Bank of England stepping in with a £65 billion emergency plan to stop a run on pension funds. The fear was that there would be a massive sell-off of bonds, which could potentially leave pension funds insolvent. The conditions were perfect for a death spiral, where fear leads to selling off bonds, and then the selling off bonds generates more fear, leading to a bigger sell-off. Bonds are normally seen as a slow and steady investment, and normally weather rough economic environments fairly well, but the shockwave from the budget saw some bonds fall by around 20%. Understandably, the mini-budget and the subsequent outroar it created caused massive panic in the markets and caused the pound to fall off a cliff. I'm pretty sure when President Zelensky asked for tanks for the Russian conflict, this isn't what he meant. It goes to show though how bad things got, bearing in mind there's been a joint Western effort to try and slow the Russian economy in an effort to try and slow Putin's war machine. The amount of financial red flags that have been waved this month has been worrying, but it's been that way for most of the year. Some analysts have commentated on the state of the UK economy and compared it to more of an emerging market. This is because there seems to be less and less backing up our economy. In an emerging market, investors will generally react massively to news that can affect the markets, as there generally isn't reserve or fiscal policies in place for continued steady growth. That's why the US market is generally not shaken as much as, say, Greece's. Of course, that is a massive generalisation, but with the UK borrowing larger and larger amounts and at higher interest rates, investors are losing faith. And with no real plan yet announced about how all this borrowing will be paid for, that's understandable. So let's start taking a look at what all this did to my portfolio. I'll start with income. September was another pretty decent month of dividends, with nearly £21 received. This was mainly from Legal & General's interim dividend. This is really starting to pick up now. Once that payment gets reinvested back into LGen, I will hold nearly 400 units, so the next dividend payment will be pretty decent. That's if the economy hasn't imploded by then. My loyalty bonus payment for the month came in at 43p. If it stays at that rate, it will take me just under 2 years to reach the £10 auto reinvestment again. It is a little frustrating that it's been cut, but as I mentioned before, I'd rather be seeing growth from a fund than being paid a little more in loyalty bonus payments. I also have my Legal & General dividend to wipe my tears away with. If we move on to my portfolio, you can see it's had an absolute hammering this month. The fund that used to pay me a decent loyalty bonus is now called the Fidelity Sustainable Global Equity Fund, and you can see it's one of the only 2 funds that isn't in the red this month, which is what I meant about rather seeing a return than receiving a loyalty bonus. These screenshots were taken before the government U-turn, so it has picked up since. What you're seeing here is pretty much my portfolio at its very worst. Worst so far. This is like bearded Ian Beale portfolio.
I've got nothing left! I've got nothing left!
I think months like this are important though, as you often hear people saying you should pump all your money into stocks and shares. You'll make 7 to 10% every year. It's just not that simple. If those returns were guaranteed, then everyone would be doing it. I always say I only invest what I'm prepared to lose, and I don't invest for short-term gains. I want to see steady growth over the long term for my investments. For short-term high returns, I think there are much better options out there. More news on that soon though. Fingers crossed. What this last month has highlighted is just how overexposed I am to the UK markets. The 3 shares I have in the fund, Centrica, LGen and Rolls-Royce, are all UK based and were yet to grow to the point where they had to surpass the dealing fees. So they were already down, but then with the stock market taking a beating, this just made them drop even further. People have been buying the dip though, and Rolls-Royce were actually the 3rd most bought share recently on Hargreaves Lansdown. I won't be jumping on that wagon though. There is potential for the company to profit from defence contracts, but the company still has massive debt. With purse strings tightening on a global scale as well, I can't help but think that the family holiday will be one of the things that people will be bidding off next year, which will mean less flying hours for their planes, and less meaty paychecks for servicing their planes. Don't get me wrong, I'm glad I own some, but I think for now, I'll stick with what I have and not add any more. Let's take a quick look at the two funds that have performed well this month. If we look at the fundamentals, we can see they aren't really exposed to the UK market. The performance has still dipped, but it's not taken a hit like the funds that are UK based. Moving forward, I will be looking to consolidate some of my holdings further, and if I do add new cash, then it will likely be invested into a diversified fund such as this. It's why the Fidelity Fund is my main holding. I'll just whiz through the remaining funds so you can see a load of ski slopes. Oh no, hang on. They're the monthly performance charts. My bad. Feel free to pause and take a closer look before we see if NS&I made my month any better. So let's take a look at my premium bond winnings for the month. I had high hopes for October's draw. The equivalent prize rate was up to 2.2%, so I was feeling pretty optimistic. If that £50,000 was in an easy access savings account, with current best rates being around the 2% mark, that £50,000 would have earned me just over £80 in interest. What I won in October's draw though was nothing. I think with interest rates shooting up now, a lot of people will be questioning if premium bonds are right for them, especially if they're wanting a guaranteed income. That's it for today. Don't forget to leave a like and subscribe for future content. Stay safe out there. Peace.